So there are a few ways to plan around these price spikes that we see warned about on the internet. These buy before this date or forever be sorry. Now, one is to consult our trusty Magic 8 Ball here. The other I need a few minutes to explain. So a big part of the gold and silver conversation revolves around immediacy. Do this before this happens, or you'll be sorry. Some guy's terrified face over flames. Well, if you were to go back through time, you can see people have been telling us this same story all along. It's not new. The end has been predicted over and over, but we're all still here. Now, I'll just tell you up front that I'm a believer in creating consistent habits over trying to time the market. Freaking out. So maybe I have some bias against some of those stories, but I do think there are important dates coming up, dates that could very likely affect the price of precious metals. So we're going to peel back some of that hyperbole and dial in on an actual event that really could change the price of metals overnight. Before we get back to it, if you're looking for precious metals, hit up SD Bullion. New customers even get gold and silver for spot. That's sdbullion.com/new. So first of all, I'm no expert. My Magic 8 Ball works just about as well as yours. And I also don't have any reason to want to buy up a bunch of gold or silver ahead of some kind of price spike. I'm not looking to then turn around and sell it for profit. That's not my intended use case. Now, what I'm looking to do here is get a line on the baseline price, where things should be, when they could change. And this is a simple observation, but it's based on data and the current best guess of professionals. So no guarantee of future events, but better than throwing darts at a wall. So let's take a look at a tool that works better than those darts, works better than a Magic 8 Ball. This is the CME FedWatch tool, and it tells us what interest rate traders expect the Fed's target rate to be month by month. And we can see here that most professional traders think the Fed fund rate will most likely remain unchanged in March, with a 97.5% probability that it stays where it is. So the next Fed meeting is the end of April, beginning of May. And we can see here that on May 1st, the probability of no change is still 82.6%. All right, June is where this flips. What this is telling us is that the probability of a rate decrease in June jumps from 17.3% to 62.5%. And by July, the probability of a rate cut is 84%. So there are a few reasons the Fed's target rate is important. I think it's hard to overstate that. Reversing policy to cut rates is this pivot that we've all heard about. So one of the practical considerations here is that a rate cut affects yields of treasury products, and those products compete with gold. Cut that yield, gold becomes more attractive. Gold ETFs in particular will see higher demand. So we're jumping to a conclusion, we're making some assumptions, but those ideas are not coming from my Magic 8 Ball. They're coming from analysts at Scotiabank, at UBS, and lots of others. UBS right now is currently forecasting gold to move about 10%, up to $22.50 by the end of the year. And that's based entirely on a Fed pivot. Okay, so let's level set for a minute. A move to $22.50 is significant. That's going to squeeze out some buyers. It has already. Some are already out. The current rally in gold price has been built on this story of rate cuts, so some of that's already priced in. We saw a 15% gain last year in 2023, and most of that came on the anticipation of Fed rate policy change. Now, my guess here is that most people will keep buying. It's significant, and it might affect how much people buy, but I doubt many of us out here are going to have a sudden change in mood and stop altogether if the price spikes another 10%. Now, most of the urgent warnings that you'll see for this stuff, they tend to lean crazy, but most of them are going to be hinged on a clear idea or event. And most of those ideas or events won't likely change price beyond, say, 10 or 15%. We're just trying to be realistic here. Now, the warnings that call for total revaluation, for prices going to the moon, well, I'm not really sure what to tell you about that kind of warning because it's not hinged on anything that's likely. Now, you can say anything's possible, but you can't really plan on that. So I think the word I'm going for here is unhinged. So let's say for a minute that a 10% spike in price would throw you off and put you on the sidelines. You're not going to buy anymore. If you want to get ahead of that, the only forecasted event that we can plan around is this Fed pivot. And we have actual dates to plan around here. It's not just an idea. Traders currently think there's a 62.5% probability that we'll see a rate cut in June. So we have a date there. The Fed meeting ends on the 12th. So there's your first date. There's an 84% probability that we'll see it happen in July, and that meeting ends on the 31st. So there's your second date. So that gives you 77 days at the time of recording to get your gold and silver before this happens, before it's too late. Now, if the pebble gets kicked down the road to July, I guess you'll have another 49 days after that. Give you one more chance to get in before you're just out of luck. Now, I don't know if those dates or those forecasts deserve the flames and the dire warnings and the terrified looking humans, but it's something to be aware of, at least something to plan around. Maybe it's something I'm potentially patterning my purchases around. What you do, though, of course, is up to you. Now, simply being realistic here, there are an infinite number of surprise events or data that could change all of this. All we really can do here is try to understand what's happening to the baseline. So to give an example of that, when I saw the price of gold drop below $2,000 a few weeks ago, I considered that a dip rather than a trend, and I made some unplanned purchases. Now, the reason there is that we didn't have anything pushing us off that baseline. A longer-term downtrend didn't make much sense because we still have the pivot ahead of us. Now, that doesn't mean that it couldn't have gone below that 1984 or wherever it hit, and I wouldn't have been surprised if it had. It just meant that nothing had really changed going forward. That $2,250 estimate that UBS had given still made sense. So I've given some ideas, some events, and even some dates here. Now, here's the problem. The problem with using a single date like June 12th or June 31st is that traders buy the rumor. We saw this happen in December. We see it happen every day. Now, every time we get inflation data between now and the actual rate cuts, we're going to see traders try to play the move in advance. So if we see inflation come in hot, that's going to push out the expectation for the pivot. We could see prices fall. Now, if we see it fall in line closer to plan, we might see prices jump. So do you have some set amount of time to buy gold or silver before it's too late? Well, no, probably not. But knowing what will move the prices up and when that will happen, even if that date is still a little bit subject to change, is important for overall planning. If you can get gold early in the year for 10 to 15% less than later in the year, that's good to know. So let's call it good there. I think my magic 8 ball is overheating. I see smoke. So let us know what you think about gold and silver prices coming up this year. Are you expecting a big run? 10%, 15%, more percent? Let us know. And then let us know how you're playing it. And then while you're in the comments, be sure to hit that like button. If you found any of this interesting, be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.